Monday.com stock plummeted 12% on Monday, despite the company reporting better than expected earnings, leaving investors perplexed. The catalyst for the sell off may have been the market's expectations being too high heading into the report. Analysts had predicted a revenue of $113 million, but Monday.com beat this by delivering $123 million in Q2 2023. However, investors might be concerned that the company's growth rate is slowing down. Data points from the earnings report showed that Monday.com gross margin expanded to 75%, up from 73% in the same period last year. The company also reported a net income of $26 million compared to a loss of $13 million during Q2 2022. Despite these positives, investors seem to be focusing on the slower revenue growth. One possible scenario is that investors are pricing in the potential impact of the economic downturn on Monday.com business. As customers become more cautious with their spending, they might reduce their adoption of new software solutions like Monday.com. This could lead to a decline in revenue and profits for the company. Another scenario is that investors are concerned about Monday.com high valuation multiple. The company's stock price has more than doubled over the past year, which may make it vulnerable to a correction if growth slows down further. According to data from Bloomberg, Monday.com forward price to earnings PE ratio stands at 55.5, which is above its 5-year average. However, not everyone sees this as a buying opportunity. Some analysts believe that the sell-off is an overreaction and that Monday.com growth fundamentals remain intact. We continue to believe in the company's strong growth prospects, said a spokesperson for one of the major Wall Street firms covering Monday.com. One risk that could change this narrative is a surprise downgrade from one of the major Wall Street analysts who cover the stock. This could lead to a wave of selling and further pressure on the company's shares. According to data from FactSet, 67% of analysts have a buy or overweight rating on Monday.com. A tactical idea for investors could be to buy put options with a strike price at $150, which would give them protection if the stock falls below this level. Alternatively, they could wait for the dust to settle and look for a buying opportunity when the stock dips closer to its 200-day moving average. Monday.com stock has been volatile in recent months, and investors may need to be patient before making any trading decisions. The company's Q2 revenue growth rate of 48% was slower than the 53% growth seen in the previous quarter, which could be a concern for investors. The company's management team remains optimistic about its prospects, citing strong demand from customers across various industries. However, investors may need to take a more cautious approach given the current market conditions and the potential risks associated with Monday.com high valuation multiple. As of Friday's close, Monday.com stock price stood at $155.50, giving it a market capitalization of over $10 billion. Investors will be watching closely for any updates from the company or its analysts, which could influence their trading decisions. In conclusion, while Monday.com earnings report was strong on paper, investors seem to be focusing on slower revenue growth and the potential impact of the economic downturn on the company's business. As always, it's essential to stay informed and make trading decisions based on your individual risk tolerance and investment goals.